And we are live. What's good, everybody? It's your boy TBT, aka the Brainless Trader, and we are back with another one. Back with another Monday morning markets live. Looking at the markets. Like I said before, I'd like to be getting into more of the London sessions. We've had some pretty nice London sessions earlier this week, and we now have some potential opportunities this week. We are going to start by looking at the news for today, which is going to be Thursday, June 22nd. And you got something at 4 a.m. You got a Fed speech that's coming up. We can observe that. And then we're going to have some stuff at 7 a.m. So it's quite possible maybe I'll do two live sessions, one right now, maybe take a nap and come back for that 7 a.m. We've also got Fed Powell testifying at 10, so maybe today is not the best day for solid trades. Maybe tomorrow, but then you also got Fed speeches tomorrow. It's not the head of the Fed. It's not Powell, but you still have speeches. Powell is, what is he, the president? Oh, he's the chair. Yeah, he's the chair, and then all these other dudes are non-chair, but representatives from their different respective states and all that stuff. So it's important, just to be mindful of the fact that there's volatile news in the market, especially this specific one for the GBP comes around, I would say every month or so, unless I'm wrong. Um, I'm pretty sure we see this combination of news a couple times a year at least. Maybe it's every quarter or something. Um, but regardless, we are here in the markets and we're going to analyze what we see. And then maybe we can be able to make some decisions about what we want to do going forward. Um, so yeah, we shall see. Let me check my volume real quick. All right. Okay, my volume is good, so I'm gonna keep going. All right. So with the DXY, it's just starting from the daily. We've really gotten some pretty solid movement in the downside direction after we ran out. We didn't run out liquidity, but we did run a few fair value gaps, and this was pretty much earlier last week, beginning of June into now. And so what I've been anticipating is just that eventually price is going to want to grab this area of liquidity. Relative equal lows. It's very juicy. Also got a fair value gap that hasn't been completely rebalanced just yet. And more liquidity to the downside. This is the area that I really think is, the low-hanging fruit, if you will. A lot of times I used to put my little flags up here just to tell myself that, hey, this is what you're looking for right here. This would be my weekly objective. Now there's also a volume imbalance in here, which looks like we're about to potentially touch. Um, so that's another thing. When you have a volume imbalance like this, that price likes to go after them. This is a volume imbalance, but it's also got a fair value gap, basically the same, distance. And you continue to see fair value gaps being created to the downside here. So if we're going into maybe a lower time frame, we can kind of see what we're dealing with. I had somewhat of a breaker here, but I don't really think that is going to be too accurate now. This was from a couple of days ago. Um, I don't really think we're looking at a breaker per se. We did make a run on whatever this is. That looks like it might be like an hour, 2 hour fair value gap, maybe a 30-minute fair value gap. Let's see what. Yeah, there you go. 30-minute fair value gap. He was hiding. So we ran. You can't really say you ran the stops on the 30-minute fair value gap, but I guess you could say that because sometimes people do set their stops here. Let's get rid of all these old liquidity zones. Let's go ahead and put the stream down here so I can see it in case there are comments. I anticipate too many, but gotta be ready just in case y'all have some questions. Yes, sir. But yeah, this is really just my way of clocking into the market. I think that I enjoy getting up and trading for real. And so if this is what's gonna get me up and you know looking at the market when I need to be, then hey, I'm gonna do it. I'm gonna use it. So the thing about this is that prices ran out the liquidity on all of these levels. It's ran out this, this, and this, which I had these levels at some point as areas that price could run out liquidity. So now that it has, you're looking to that imbalance. Just looking at the day, your Asian session is forming and you're kind of running away from that. You got an imbalance here that price is looking like it's going to run past, maybe retest. So what does that mean for our other pairs? Because price is giving us a nice solid movement. Let's move our 12 a.m. open to where it needs to be over here. This is the 12 a.m. open. This is a fair value gap here. This was also a fair value gap here. And this was also a fair value gap here on the 30-minute chart. If we go back to the 4-hour, what do we see? We see that large fair value gap, price having run down into it, and now running away. What can this be framed as? Because I see an hour. I basically see an hour fair value gap that kind of aligns with they're not totally aligned. I guess I'll stick with this one. Because what you have here essentially is you have a balanced price range, and then you have price looking like it's shooting up for now. The only issue I have with take a trade here is that you got the Fed about to speak in a couple minutes, 15 minutes. I think we said Fed Waller, although it's not too highly volatile. So if you're looking at this, you're wondering, what does this mean for today? Is this the low of the day, running into this fair value gap almost perfectly with a balanced price range? Us knowing that price should not go past this level, and if it does, then that trade idea to the upside is invalidated. But you have liquidity here and here that you're kind of watching. Now, I use this as my eyes to say this is where I would begin looking for a trade. So I don't know if this is necessary right now, but I know the finish lines are up here. So I'm curious to see what's going to happen at 4 though, because then after 4 you have like no news, right, until 7. So between 4 and 5, I'm curious to see what might go down in terms of price that could give us, some insight. Now, if we back it up a little bit and just say, hey, like, I mean, we don't have to back it up, I guess, but if we look here, we didn't really ever get down to this fair value gap. What we did do is we ran into this one. Let's see if there's a smaller one that we can kind of choose that makes sense. Okay, there you go. I think I like that 30-minute a little bit better. But this actually 30. Nah, this works. What is this? The 15? Yeah. Bet you the 30 minutes the same exact area. I bet. Oh, I was wrong. It's bigger. Maybe we do like the 30-minute a little bit better. Captures the whole thing. Because the thing about this is prices already pulled into this 30-minute fair value gap the day before. And now you see price pulling into another 30-minute fair value gap. What we have here, I don't know what time frame this was on. Let's see. Yeah, certainly that's a balanced price range on the 30-minute chart. If we're seeing that correctly, the price jumping out now, right? So the thing is, okay, what's forming? do we have some sort of a, you could say this is a run on stops potentially below this fair value gap, or just an entry into the fair value gap. If you took a trade, you take it here and you target buy side liquidity, right? Stop would be not too bad. And if that's the low of the day, that's certainly not a bad place to be. Um, Being that the DXY is majorly bearish and looking like it could potentially run into this volume imbalance, at least, that might not be a bad trade either. I think that looking deeper, after price were to seek this liquidity out, where are the targets? It's their intermediate target, like a fair value gap, that we could say, yeah, price might touch this. And you have this fair value gap that's been partially rebalanced, not fully though. Let's do this. Partial, so I'll go with the partialness of it. So that could be a potential target before the ultimate target, right? Being that the Fed is speaking at 4, but it's not high impact. But he's still speaking at 4, speaking at 10 as well, but that's high impact at 10 after all the high impact. Now this all that 7 a.m. jazz for GBP usually, depending on the year or the month or whatever, it's not always like the worst volatility wise. Sometimes it actually offers pretty good setups. So the thing here is looking at, we have the fair value gaps kind of operating in our favor. What does this look like? This looks like a rejection block, but not necessarily a rejection block that would warrant this, because this doesn't pull down all the way into it, but it does pull down to a fair value gap. So if I were to take this trade and put my stops below the low of the day, potentially we might be onto something. Now this could also potentially be some sort of breaker action. I don't really know. It's not really giving that just yet. If we're looking for the order block in this range, you could say the order block is this lowest down close candle. If we're looking for the Judas swing in this range, you could say that's a solid look, and it's at the 50% mark. So I am not averse to at least testing this theory with the more lot size type of move. Yeah, it being it being early and all. Oh, okay, paper trading. It's fine. It being early and all, is there potential to catch, you know, trade where you got the low of the day? Potentially. Could be interesting. How does that align with our 12 a.m. open? The entry would be right on the 12 a.m. open. And if we are bullish, which we are bullish because the DXY is bearish, that could be something. Could be something. So let's see. Fair value gap entry. Stops potentially set below the low of the day. Pending volatility. Now, since we're so close to this 4 a.m. time frame, we might wait for it because there's really no rush. Even though it seems like you should just get in, there's really no rush. I've been there so many times where you're like, yeah, let's do it. And then you're like, I really didn't have to make that trade at that moment in time. Knowing that there's 4 a.m. news, I'm like, yeah, we can wait. It's only 8 minutes away, so that's what we'll do. We'll practice good trading etiquette. Um, what I would be looking for though is potentially like a, yeah, this is forming a nice fair value gap. If this holds, then I would be looking for something like, let's say that price goes up here, grabs this little liquidity. I'd be looking for some sort of trade back into this fair value gap. You have a small breaker, low, high, lower low, highs up close candles there. So I would be like not wanting price to trade past that area. So I'm about to get rid of this. No, but let's look at that. Let's look at this. All right, so we had a breaker here. This is the one, two, third approach into the breaker. Typically, the third approach into the breaker, we're not worried about that. Bro, why paper trading in that super trend indicator? So why paper trading? Because I like to show proof of concept on my lives at least. I have my actual accounts, that I would trade with. Right now, I'm just focusing on a a funded trader account. So that would be on my phone. You know what I'm saying? But just to be able to show that I'm actually taking the trades, then that's why I would do paper trading on here until I actually get my, succeed with my challenge and get my live account. Then I could potentially do how like Paladin or JCap do, where they have like the demo account on TradingView, but they trade all their live accounts off of it. So it could do something like that. The indicator is just the indicator to show me the Asian range. So it's not really like a indicator per se. It's just something that helps me understand where the Asian range is, and then this little thick part helps me to find the 12 a.m. open, because I like to use ICT's Asian range concept, where he kind of tells you to look at the 12 a.m. open, within that Asian range, and then also if you're bullish, then you're trying to take trades below that 12 a.m. open, um, with potentially with your stops below the low of the day, and then likewise if you're bearish, that 12 a.m. open would be here for this. If you're bearish, you'd want to take trades above the 12 a.m. open, which would give you the most likely opportunity to be successful. So that's why paper trading, and that's why the the indicator. It's not like an indicator, but it is an indicator that helps me to understand where the Asian range is. So yeah, but yeah, the fact that we have this breaker that was a breaker that now price is approaching for the third time. That is why I think this one might be a solid bullish move, especially being that price in the DXY is pretty fairly bearish. Let's go check out US oil real quick, because it's funny, like US oil looks the opposite, where it doesn't look bullish. It's already ran out liquidity here. It's run into a fair value gap here if you look to the left. And I I do wonder if this is kind of turning around. Whenever you get a run on liquidity, you're always looking potentially for the opposite run on liquidity, unless prices show so bullish that it's going to continue. I'm looking for fair value gaps to see what is there fair. Oh, there you go. On a 2 hour, this is inside of a fair value gap right now. with liquidity above. Liquidity is pretty close, and you just basically just have fair value gaps to the bottom. Yeah, it's interesting. I don't see. I mean, besides the fair value gap, I don't see anything particularly clear to the upside, especially that you're not at a discount. You're in a premium right now, trying to take a buy. But you do know that the DXY is bearish, so you have thoughts of taking a buy, but you don't see anything in the technicals that supports that. So to be honest, I'm looking at this volume imbalance here. Let's take this off real quick so we can see it a little clearer. Because the Asian range isn't even correct in this one. I don't know why, but I know where it's at. So we have a volume imbalance here from the body of this candle to the body of this candle. It's 1 hour. I like to make my volume imbalances white, white, white. Now, what's up with the coloring, my guy? Oh, there you go, the background. Oh, well, yeah, give me a little shading, something. Yeah, because the volume imbalance actually kind of looks like it's being respected, and I just don't really see. I mean, there was a 2 hour fair value gap that price is currently in. Um, I would want to see something more form, like a breaker or something. I'll look at it as 4 a.m. Let's go back to the GBP, see what they talking about. So, like I said, you got the balanced price range. Price does pull into this fair value gap area of the balanced price range. This particular fair value gap, I guess I'll just focus on this one because y'all see the balanced price range already. This particular area, on this side, the fair value gap is being respected. The order block would be way down here. Lowest down close candle. Um, yeah, paper trading said they was taking a break, so I was trying to at least take the trade for y'all to keep the proof of concept that I actually took the trade, so I could talk about it later. But you know, it's what it is. Y'all just gonna have to believe me when I say I took the trade here. Um, so yeah, it's interesting because it's not really. It's actually kind of slowing down. Got liquidity a little bit here. You have, like I was saying, the makings of a low key breaker, fair value gap across from it, barely. So it's not like you really have super confidence. All right, Raj said the 12 a.m. Asian open range, is it similar to Asian session hole, like London session open rate on Asian session range or something? Also using the new 2023 mentorship. Um, yes. So let's answer the first question. I think that yes, it's essentially, you could say it's a run on the Asian stops, or it could be a run on the previous day's high or lows, if that makes sense. Any run on liquidity. Oh, let's take that off. That's different. Any run on liquidity per se, even if it's a run into a fair value gap where people could have their stops set here, right? That could technically be a run on liquidity as well. Um, but essentially what it is that the main premise is that you're looking for price to, if you're bullish, to go below the 12 a.m. open, and your safe zone to take trades would be here, anywhere within here below the 12 a.m. open, especially if you get a fair value gap or something like that that supports a solid entry point, and then you get price to run out of that fair value gap, right? That supports a solid entry point. Now that we're looking at the 30 minute, if we zoom into this, you can also see that there's a potential breaker here with a low. If we take these out, it's kind of difficult to see when you have the freaking there you go. So low, high, lower low, highest up close candle, breaker, fair value gap across. You would want to see if price is going to trade into this area, and if it does, what is it going to do? Is it going to continue to move out or what? Because as you see, price is already slowing down here. So that's just mixing the breaker, which is ICTs. Like it's not even in. I mean, it's in the 2023 mentorship. It's in the 2022. It's also in like pre-mentorship stuff. Um, but also, um, you know, the fair value gap and order block concept, right, from the 2022 mentorship, where you got the order block, fair value gap, right? All that, a lot of this stuff is it's just a different way to look at the same thing, if that makes sense. Different way to look at the same thing. And then even if you were to set your stops below here, you have the confidence of the fair value gap, and then also this fair value gap that price would have to go past before you can say, oh, okay, well, let me just not take that trade, or let me, take my money out if I was wrong or whatever. So let's answer your other questions. You said Asian range. Do you use to identify daily bias? How do you identify bias? Do you use 4 hour daily OB and trade off of that as soon as it taps into it? So I typically don't do anything like as soon as it taps. I try to like build in extra confidence levels, so that just so that my mental like psyche feels good about the trade. Um, a lot of times, as far as establishing bias, I will use the DXY, especially if I'm trading something that's pegged onto the DXY, like the GBP USD or like oil. Um, I would use the DXY to establish my daily bias, right? So that's why I was saying earlier that if we looked at the DXY, you're going basically and looking at when I use the DXY, I also go back to the pairs that I'm looking at and I see if price is looking similar but in the opposite direction, if that makes sense. So you have a setup where price essentially over the last few weeks, after it ran out liquidity above, let's go to the daily, because I typically start with the daily. If you're asking about like what charts to find your bias on, I typically start with the daily. Now at the beginning of the week, I look at the weekly chart to see where maybe that weekly candlestick might print, and I monitor that over the week. But I'm typically looking at the daily. So you had basically a run into this fair value gap, didn't close past it, and you see price continue to cascade down. You kind of had a breaker form, price traded into that breaker, and then continued down one leg of accumulation, two legs of accumulation. So I'm anticipating that on the second leg of accumulation, we're going to get a really high price run or low price run to these lows. Um, we had to see, right? And then you kind of validate that with our fair value gaps remaining open and being traded into, right? Traded into, but not closed past. That would give me confidence to say, okay, I'm bearish in the DXY, which means when I come back to the GU, I'm bullish, if that makes sense, in GU, right? But then in GU, I got to go down to the lower time frames to understand, okay, yes, I think I'm bullish, but where exactly and how should I enter trades, right? So if I'm looking at GU now, I'm just looking at the fact that one, you have fair value gaps all over the place that kind of key you into what price is doing. Um, the fact that you ran out, I think this is a daily fair value gap. If I go up, let's see. Yeah. So this large orange one or yellow one is a daily fair value gap. So I would typically identify my fair value gaps on all levels, daily, 4H, 2H, and just see which ones are most significant to price, which ones price is reacting to the most. And then as I go down from the daily to the 4H to the 2H, I'm starting to try to see where are there some of ICT's other PD arrays. You obviously have fair value gaps. This is a 30-minute, but you also have the hour fair value gaps. And then you're really looking for, okay, do I have a breaker? Do I have, you know, um, what was it that I was calling it earlier? Do I have a breaker? Do I have a balanced price range? Do I have, some of these other concepts that kind of makes it easy for me to understand what price might want to do? Do I have a rejection block? Right, this is a rejection block. Price is traded past it and then immediately trades it above it. It typically might come back around that same area and touch, but if it doesn't, if there's a fair value gap, you see why it's not, why it hasn't done that. So I use everything in my wheelhouse to try to establish, you know, how I feel about price. And then when it comes down to actually taking the trades, I'm really just trying to be in line with easy price action. And I want my moves when I take the trade, I would like the trades to go quickly. I would like to be right quickly. And if I'm not, then I'm not totally questioning my move, but I'm very cautious as to leaving my trade in for too long, or like I like to say, like 30 minutes to an hour. If my trade hasn't moved, I'm probably wrong. Even though sometimes I like to hold on to the biscuit, like if it hasn't gone anywhere 30 minutes to an hour, just because I'm typically trying to scalp, 30 to 50 pips or 20 to 30 pips. If it hasn't gone anywhere, then that says something to me. Um, and so I have to pay attention to those signals for myself, because it just helps my psyche. So that's how I establish my daily bias, essentially. But my goal is to be able to take trades where I have identified a potential, if I'm bullish, a low of the day, and if I can set my stops below that low of the day within reasonable distance of my trade. Like for instance, right now this is like 30, 37 pips. It's kind of far. So I'd be looking maybe to set it below this fair value gap or something. Um, but yeah, that's in essence what my thought process, and really just trying to keep it simple. Let's see a comment. Oh, did you have another comment? I think that was it. Yeah, let me know if that answers your question. I pretty much use all the time frames. I don't necessarily look into just one OB and trade off of that. I look into everything, um, and try to trade off of what is most significant to price. I'm really looking for my setup, which is if I can get a breaker that is below the 12 a.m. open and trade that, and take entries where I take entries that are as many as possible below the 12 a.m. open. I like that a lot, because it typically gives me the most bang for my buck. And a lot of times you can capture the entire daily range just by doing that. Um, I think the trouble sometimes that I have is just understanding, like, okay, like for instance, right now, this was the breaker, right? Let's just see if we can identify it let's do the 30-minute again. Okay, so I'm going to go ahead and throw this here. This was my breaker. Do, 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 do. 30-minute breaker, highest up close candle. Like, there's a fair value gap. Price is clearly trading away from it, right? But like, now I'm like, okay, should I have taken that already? Yeah, probably, right? Because if I were to take it now, I'm sure price is going to trade back down into this. Now, if it doesn't, cool. I just missed that trade. If it does, and it respects this area or this area and continues, then I have another entry. So I think that's the part that's kind of difficult to battle with. Sometimes you're like, "Ooh, I know I was supposed to be in this move." Now you want to take it. It's just like it's overextended right now. So you really want to wait for another swing, another Judas swing. All right, let's see what you got to say. Say yes, thanks on the insight. How many pairs do you generally trade? Do you also trade gold and NQ? Do you use SMTs, etc.? If yes, what SMT do you use for gold? Do you use DXY or UJ for gold? Um, so I do trade other pairs. Let's go back to oil. That's a good segue to oil. I do trade other pairs. Recently, I watched a I'm new to oil, U.S. oil, but I watched a ICT interview of one of his charter member students who is successful, a guy that's from Iraq, and he was talking about how U.S. oil is really, it's like easy setups, low hanging fruit. The setups are really easy to understand, and he just really likes it. It doesn't give you too much like gold or GU. It always like tries to jab you before it gives you your money. And I was like, man, shoot, let me try that. And I've noticed the same thing. Like it's not a bad pay to trade. I actually really like it for multiple reasons. And typically the fair value gaps are the easiest to enter trades in. I used to trade gold. I still have it on my charts. Oh no, I might have took it off. I used to chart up gold and provide my analysis on it every week, but I just never would find myself taking a lot of trades in it. And so I've kind of replaced it with gold just for the fact that I replaced gold with US oil just because just because oil provides me with easier setups. And I feel like it's more in line with what ICT teaches, whereas gold is too, but gold is going to run your stops a lot before it gives you the move. So if you understand your patience and you can, be nimble with that, then you'll be fine with gold. Um, I never used any SMTs with gold. I would typically use SMTs only with indexes. I usually would trade the US 100 if I did trade an index. I'm not big on the indexes just because I haven't spent a lot of time with them. Um, but I would I would be looking at the SMT like ICT teaches between the US 100, US 500, or like S&P 500 and US 30, and just trying to see which one is the weaker of the three, which one is lagging behind, which one is the strongest of the three. Um, and out of those three, my preference is always US 100, just because I feel like it's a middle ground between US 500 S&P 500 and US 30. So it kind of gives it will run your stops, but it kind of gives you a chance to get in. US S&P 500 typically is a lot slower to me, and US 30 is like stupid, like it's wild. So I I stopped messing with US 30 when I used to trade. Oh, look at you, Jay. When I used to trade retail concepts and got burned a couple times and was like, yeah, you know what, US 30 is not for me. It's just not for me. But I also trade GJ. So I pretty much trade GBP USD, uh, GBP JPY, and US oil. And I'm looking for the same things. I'm looking for price to form a potential breaker, hopefully below the 12 a.m. open. And I'm looking for fair value gap entries. I do use order blocks if they're relevant, right? If it makes sense to use them. I do use the order blocks, but what you'll find is that the entries are like in the same areas, and they all like the order block and the break, like all of it's around the same area. So it's just a different way to look at the same thing. The Judas swing, you're always going to need a fair value gap in the order block to validate that Judas swing. So that swing should be coming into a fair value gap in the order block, if that makes sense. Um, so like a lot of the concepts, they should be used in unison because you're looking for an entry point in the same area. You're just looking at it in a different way. So I'm pretty solid on this move. I'm just hoping for price to give me a run back into this area, and I don't know if it's going to give me that. One thing I can say is that it's moving super super slow to the upside. So by now, if I would have taken this trade, which I took it in a TFT challenge account. I didn't take it in my actual paid challenge account because I was too far from the entry by the time I wanted to. And it's too bad that I couldn't take it here in paper trading just to show where I would have taken the trade. Um, but I'm anticipating something to come back into either I'm gonna go on a 30-minute chart and just say this fair value gap here is the one I'm looking at. If price doesn't come down that far and turns around somewhere in here or whatever, then I'm cool with that. But this is the area that I'm looking at as a zone that potentially price could come back into. And why does this say 30-minute fair value gap if it's not the 30-minute fair value gap? It's an hour fair value gap. Okay. 1H FVG. Um, but yeah, bro, you got some good questions though. Okay, yeah, you said something else. You said oil is awesome for price action traders. Like the chart is currently printing a descending triangle bullish. Also, did you start off with ICT or you came through all the YouTube strategies and MAs? So I did not start off with ICT. I wish I did. But I don't know that if I started off with ICT, I don't know if I would have had the same appreciation for his concepts as I do now that I've gotten burned so much with the retail concepts. And it's not to say that the retail concepts weren't good. I just didn't have a mentor with the retail concepts to show me how to use them correctly, because there's people that make money with that stuff too. So, no disrespect to anybody else, but when I found ICT stuff, it made sense to me because he was showing me why I was getting burnt with the retail concepts. So I basically traded from November 2018 all the way through November 2020 with retail concepts. Um, and I almost gave up on trading in general before I found ICT because I didn't have a mentor and I just kind of felt like half the time I was hit or miss and I was losing a lot of cash between 2018 and 2020. I probably lost like $4,000 just trying to make it, like. And at the time, I didn't have no real job or anything, so that was money, that was cash for me, like. So um, when I found ICT, it was 2020, and I got into his last mentorship for 2021. And the first video, I knew that I was gonna be good with his concepts. I was like, yeah, this is gonna work out a little bit better for me because he's explaining the why behind everything, why it's happening, and understanding the why helps me as far as just knowing that okay, I know why I'm getting burnt. Now let's just focus on not getting burnt so much, and let's focus on being more profitable with taking the proper trades and having a model because that's the one thing I didn't have before either. I didn't have no real way that I was getting into trades, bro. I was just like supporting resistance, like shotgun. Hopefully, this junk works. High leverage. That's why I was losing a lot of cash. So with ICT, it's taught me a lot just about like maturity and trading, like, you know, understanding the reason why I'm taking certain stuff. Um, but yeah, you said it really helps if you have knowledge apart from ICT. Like, yeah, I agree. I agree with that. Because I think that if you just start with ICT, you don't have a true appreciation for its concepts. Now, not to say that you couldn't just start with ICT and be great, because I'm pretty sure there's people who have been. But when you start off with retail concepts and then you go to ICT, I feel like you're more thankful for what ICT is teaching because he's teaching you why you were losing before, if that makes sense. So yeah, I agree with you. If you have some knowledge of other stuff, that it kind of bridges your learning because you're not looking to like understand like what a pip is. You're just more like trying to understand, okay, how the heck is this man ICT making this money, and how can I do that? And you can translate it faster. But yeah, I agree. I think without the context of like where to use retail concepts like trading triangles or supporting supply and demand and stuff like that. Like I used to try to use trading triangles too, and I mean, I didn't know the narrative. I didn't know the reason why I was using them. I just seen something, you feel me? And I was like, okay, that got to be something. And I was just in my brain making that stuff up. So I think, if you can be successful with anything, I think you just got to understand the why. Why are you doing it? When is it going to be more successful? Like, that's what I like about ICT is he teaches us like, yeah, my concepts are good, but like at XYZ time, that junk might not work. So just so you know, that junk might not work today because the Fed is got an announcement and all of this and all of that. And like I didn't never pay attention to that stuff before. I didn't think that stuff was important. Um, but now I know for sure now that it is. So yeah, appreciate the conversation with you, Raj. Let me know if you got any more questions as we walking through some stuff. Um, but yeah, I'm pretty much just looking at this to see if price will come back towards the 12 a.m. open to give me an entry. Um, the next legitimate news is like 7 a.m. So it's quite possible we might be in a lull until then. What I'm hoping is that price doesn't just run liquidity. Because if it doesn't run out liquidity too fast, but comes like maybe just runs this, because already ran this liquidity out and this high as well. But if it like comes back down into this area, I'm hoping for it to come back down into one of these fair value gaps, particularly this one. If we go to the lower time frame, let's see what they got. Not much. Not much. See that price could potentially turn around right now though. So I'm kind of looking for price to turn back around. This looks really nice though if you're looking for just a fair value gap entry. Had I caught price down here, I might definitely have taken that trade in anticipation of the breaker forming. That's one thing I've been trying to do. Is like, okay, yeah, I understand the breaker and I understand the 12 a.m. open and the fair value gap and the Judas swing and the order block fair value gap. But how do I take this further? Like, if I have the fair value gap and I have price below a 12 a.m. open and I am bullish, I could take this trade right here, knowing that it's in a fair value gap. I set my stop below it, and I mean this literally that could just be my trade for the day. That's money right here. That's 20, 30, almost 40 pips. I wouldn't even have to take another trade that day because that's really all I'm wanting is 30 to 40 pips anyways. So that's what I've been trying to do with just being on time to the market. Um, I've noticed that between 3 a.m. and 5 a.m. I mean, I think that's ICT talks about that being his kill zone for. I think it's 2 a.m. and 5 a.m. for him for a London session, and I look at 3 a.m. to 5 a.m. just because, like, bro, I need some sleep, dog. I need some sleep. So those 2 hours, 3 a.m. to 5 a.m. is when, God willing, I will be doing more live sessions like this. All right, you said once you understand ICT 2016 mentorship and 2022 mentorship, everything else you learn makes sense. Like I saw it firsthand, I used to trade, break, and retest setups. Um, I would say yes. So I guess what I got when I was in it, well, I still am in his private mentorship, but when I did his private mentorship in 2021, I basically got a regurgitation of his 2016 mentorship, which he pretty much has on YouTube. Everything is pretty much on YouTube now. But um, I so he just revealed to us a few more things than what the other charter members had already had, um, and he basically just gave us all the stuff that you guys see like in his playlists on um, YouTube. Plus, he did like daily, like weekly, like 3 or 4 times a week. He would do like videos doing chart reviews, kind of like how he does now with his live sessions, pretty much. So you guys are basically getting on the internet the same exact thing that we got, just with the exception of you don't have the access to talk to him or like ask him questions, but like he still responds to people's questions on YouTube. So I would say once you understand, like if you don't have his private mentorship, I would say just focus on understanding 2022 mentorship. And once you understand 2022 mentorship, this year he's basically teaching a lot of bias. He's teaching a lot of understanding the narrative and then putting all his concepts together because he talks about the breakers and the fair value gaps and he talks about SMT and he talks about like turtle soup and running liquidity. I mean, he talks about everything in these live sessions. So I would say understand 2022. I'm pretty sure he said the same thing. And then if you understand 2022, you can use fair value gaps and order blocks. Then you can match that with everything else. You can match that with the Judas swing. You can match that with the breakers. Because like I said, you're basically just looking you're using the same tools to look at price differently. Like this here is a Judah swing. If you just use his Fibonacci settings, like this is a Judah swing. Prices touch the 50% line. Now I have the fair value gap that price is touching the 50% line into the fair value gap. You feel me? So that's more of a confidence. Now, if I had an order block that was here, technically, I mean, you could do these three down close candles, but that doesn't align with the fair value gap. So it's either the lowest down close, you could use the last two, but really the fair value gap is the most sure thing there. Um, and then I already showed the breaker on the lower time frame as well. So it's just the same, different concepts for the same setup, whichever one you understand best. So now I know it is just BOS displacement. I'm not 100% sure what BOS means. And then reach back to fair value gap or breaker, then shoot for the intended direction. Awesome stuff. Love the streams. Oh, okay, yeah. I don't know what BOS means, but yeah, that's basically what I'm explaining is that, however you want to look at it, you're looking at the same entry point, just in a different way. And yeah, after you get that entry point, you're waiting to see if price is going to run out these targets. So you already see that prices already ran this one out, right? And now you see what I was talking about before, where you're like, well, if you were taking the trade up here, that would be not smart because you know that price likes to run back into itself after it's ran out liquidity. It's almost like a defense mechanism or something. Like price doesn't like to be out here naked for too long, so it dips its head out and comes back into itself to try to get some more energy before going back out into the world. It's weird. But now that's what I'm looking for is price to potentially come back into that fair value gap zone. Um, now, I still do hope. Okay, cool. So this candlestick has now closed, so that's good. And now I'm really looking for price to come into this fair value gap area for real, and provide a new entry. But yeah, you had that break of structure exactly. Um, and so the fact that we broke it, we kind of know that if we do get this fair value gap here to be respected, that we could be headed back to the buy side. um Now ICT talks about how, like, if you can see both sides, then it's probably not the best trade. And what I'm noticing now is that this could be a run on liquidity, and this high low higher high could be a breaker, with this lowest down close candle being the breaker. um but that's if we were bearish, and we're not necessarily bearish, only because of the way that price has been reacting to these areas. But I will say, if price were to go past my fair value gap zone that I have here, if price were to move past this, I'm gonna just make my fair value gap green just to show where I'm looking for trades at. If price were to pass this zone, like close below it, come back down into this fair value gap, I might reconsider my thoughts on this trade, because you could then be looking at something that's bearish. But the real thing that keeps me from thinking that is just that the DXY is what is the DXY doing? DXY was showing major bearish movement, but now DXY, considering this is a real movie, and you have a similar thing here, the low low, this could be a breaker, and then you got a significant fair value gap and trade back into it. You feel me? So that is the interesting thing. I think against it only because you have these targets, this volume imbalance is like right here, and also a fair value gap that's right here that price could just go ahead and grab. And also you have the respect of the fair value gaps to the sell side up here that price has been respecting. So I'd be interested to see if price trades past like this fair value gap, for instance. If it trades past this fair value gap, then I'd be like, maybe my trade ain't what I thought it was. So regardless, I'm still bearish DXY, bullish foreign currency. Now we just need to observe. I think the fact that the 7 a.m. news is so so volatile, like stuff can still happen before it, but um, you never know. Yeah, so let's see what price does around here. Let's go check out U.S. oil real quick. Oh wow, I wasn't expecting that. Okay, so now this is what you have on U.S. oil, a bearish setup. This is a bearish setup. The volume imbalance didn't necessarily keep price from closing above it, but what it did do, oh, see, but I take that back. See, look, that's the volume imbalance. Price goes into the volume imbalance. It runs the stops, but it closes below it or inside of it. And now you have this bearish movement, this fair value gap down here, but nowhere else. So, yeah, let's see what they're talking about. I'm glad I didn't take that. This could be a trade. Now, the only thing about this trade that I don't like particularly is that the DXY has set up to be majorly bearish. But one thing I've learned in taking trades is that I want to stick with the price action of the pair and not necessarily the price action of the DXY, because the DXY oftentimes will just funnel the pair. Even if the DXY is opposite of the pair, it will still like provide the liquidity that the pair needs to go in the direction that it wants to go. So a lot of times it may be fine. Like you're looking at the pair and you're like, no, this trade setup looks really nice for the pair. But then you second guess it because you're not sure if the DXY supports it or not. When in reality, it's like, it does. It's just not completely reciprocal. Like it doesn't look exactly opposite, but a little move in the DXY could let US oil go down. And then you're looking at this like, okay, there's a major run on liquidity. You know, if you were going to take a trade up here, you don't want it to be a buy anyways. And then you got the volume imbalance and things setting up to show you that, you're headed in the right direction. Plus, there's no news per se for US oil. You could say there's no news for US oil until when? Like 10, when the Fed makes an announcement. Um, so that's the one good thing about US oil is that it's not affected by any of the GBP news. So you're really in a good situation with that too. I wish that I could take the paper trade setup just for proof of concept, bro. But you know what I can do? I could sign into my other one, but it's fine. Um, I'm interested in this trade. Not telling anybody to take it. I just like it. Raji said, "Are you liking the 2023 FEG and Silver Bullet and other things?" It honestly doesn't make much sense to you, especially the implied. Oh, so I haven't even learned about the implied fair value gap concept. I have been sticking just with my regular fair value gaps. Um, and I will tell you honestly, I'm not even paying attention to the silver bullet either. Because the silver bullet is essentially a way to find setups. If you understand some of the other concepts like the breaker and regular fair value gaps and volume imbalances and propulsion blocks, just some of this normal stuff that he's already taught. The silver bullet is just an extension of that, where at a certain time period you're looking for that setup. So it's not necessarily that it's a whole different setup. It's just that he's giving you like a really specific time period that like it typically might form in, which can help you lock in, to the fact that okay, price might do this at this time. But I have to be honest with you, I really haven't paid attention to the silver. But I have watched the live streams just for extension of my knowledge. But I typically, when I watch the live streams, I only watch them to find extra stuff about my model. Yeah, regular stuff rocks. Like the ICT stuff is already, it's not complicated, but it's very intricate, you know? It's not for the faint of heart. So, like, the fact that when you understand like one or two things that you like, bro, like, you're still going to be miles ahead of most people in the world. You know what I'm saying? So it's like, I ain't even tripping on the silver bullet or any of the new stuff. I'm not tripping on it just because I know what works for me. Like, we we talked about how I'm matching up the 12 a.m. open with fair value gaps or potential breaker setups, and then I'm looking for like fair value gap order block entry points. You know, within that within that whatever my bias is. So like, shoot, that's a lot. That's a lot in itself. That's a mouthful what I just said. You feel me? So I'm like, I'm just trying to get better at that, because I know if I can get better at that, I can get me like one or two setups a week and be straight, and get, the majority of the daily range as well. Like for instance, if you were to set this stop above this high, you could potentially get, you know whatever the daily range is going to be here. If price is going to, I don't know where it would go. I would be looking at this fair value gap as a potential target point, just because it's kind of low hanging fruit, um, on the hour chart. Um, and then you got a fair value gap. I'm sorry, you got an order block essentially. If I look on the 2 hour, these three down close candles, you got this order blocks basically right across from this fair value gap. So I would be targeting this, and then if price goes lower, then yay. But the oil has been back and forth. But it's what I'm saying about oil. Even though it's been back and forth, it still gives you some nice setups, bro. And I have just been very impressed. Like looking at this 4 hour, even if we look at the daily, like this thing has just been like just back and forth, bro. Like just in this whole range, it's gone down, up, down, up, down, up. You know what I mean? And it's still providing really clear setups. I really like that. So that is why I think GU and oil are my top pairs. GJ I really like because if I can get the breaker setup, like a clear breaker setup, very clear, then that thing will run for like 100 pips. That thing might run for like 150, bro. And you'll just be like, wow, you know, you could just take a one lot with that and make $1,000 that day and have very minimal risk. And I like that a lot. Um, so so yeah, this was supposed to be a bearish breaker, but I think I'm gonna. Oh no, it wasn't. Was it? I think it was supposed to be a bearish breaker. Yeah, but I don't think I'm gonna worry about that because we have something different here. But yeah, bro, regular stuff rocks. I'm a regular kind of dude. Let me just get good at my regular stuff. Let them have the IFG, IFVG, silver bullet. I don't even use SMT, bro. I was like, I like SMT, but with the pairs that I trade, it doesn't really like GU, GJ, you know, US oil. It's not. It's more of an indices kind of thing, you know. It's definitely an indices kind of thing. Um, and so it just never really occurred to me as something that I needed to pay too much attention to, because it was like, you know, it's not really my cup of tea. This is a 1 hour fair value gap. Oh, what are we doing? 1H, FEG. And if you listen to some like the successful like ICT traders, they'll just tell you they used to use like fair value gap, order block. You feel me? Like they just use the simple stuff too. And not to say that you can't use the silver bullet, whatever. But hey, if you can find an easy setup with an easy concept, then why not? Yeah. And yeah, that I agree. JPY pairs, when they hit that order block or fair value gap, my goodness, they like to run for days. And I really like that. And I prefer those three: U.S. oil, GJ, and GU over even the indices because I just understand them a lot better. I think oil, let's say that our currency markets go away or something, and they try to do like they try to do yeah, I agree. You can get like 100 or so pips for sure with minimal stop loss on GJ. But yeah, let's say that the financial system goes away and we don't have like um, currency pairs, but we still have like some sort of digital currency pair or something. Like oil is not gonna go away. You know what I'm saying? Gold, I don't know. I don't think gold will go away. Like oil and the indices, like those won't go away. So I feel like understanding how to trade oil is to my benefit because of that reason. Because in case they try to do some sort of digital bank currency or whatever, I'm kind of on a good. I'm on a good. You know, I'm in a good place. You feel me? I'm in a good place. Yes, sir. So oil looks like a solid trade. We're gonna step back into GU in a hot second and look at that. I don't know how ICT does these like 5 hour long um freaking sessions, bro. Cause like his voice gotta be hoarse at the end of that. Like I ain't even been talking for like less than an hour, and I need some water for sure right now. Yeah, I like U.S. oil. Okay, so over here on GU, we're at that point where I said I want to see what's gonna happen in this green area for this fair value gap, and depending on what happens, I can make my next decision if I was gonna get into a smaller trade here or what. Right now, I kind of like the U.S. oil because there's no really major news for it besides I think 10 a.m. You're gonna have some. Oh, I take that back. 8:30 a.m. You're gonna have some medium U.S. news, and then at oh hold on, yeah, and then at 10 you have the Fed, the Fed chair talking. So I can hold my stuff until 10, so long as it's a good trade. But yeah, just out here monitoring and looking at these two, GU and U.S. oil. I want to see what happens with GU if it pulls into this area. It's a nice. I honestly have confidence in it going up, and I think one thing that would be interesting with the oil, right, is that you may. That's why I'm targeting this fair value gap. It's low hanging fruit because I feel like it's still bullish. I feel like it's majorly bullish. It's been responding to fair value gaps. It's just taking a return back into this area to reload potentially for higher, I think, right now. So this is not a long term trade. This is definitely a scalp. But oil, you know, that thing might run out this whole level of liquidity right here and then give you a setup to the upside. So we'll see about oil. I have a low level entry, and then this is the thing. I just feel like I can always, after a run on liquidity, you can almost always find a breaker, bro. You zoom into that run on liquidity, you got a high, low, high, lowest down close candle is this guy. You got your breaker. Plus, you got the fair value gap to the right, which you guys can clearly see is this right across from it. And then you got this order block, three consecutive up close candles. You could just do the highest up close, or you could use all three, whatever that zone is. That's your order block area. And then price could potentially trade back into this, or it could just continue to go down. I don't know. Raj, you said, do you always wait for a tap initial FEGs or order block and then displacement and retap into FEG on the same time frame, or do you go lower time frame? So I go as low as a 3 minute, and I like to say that I try to look for that initial run into the fair value gap, and then um, you know, if that initial run into the fair value gap, so long as I'm in the right area, like for example, if we go back to the higher time frames here, like this initial run into this fair value gap, it being into a volume imbalance, and also there's a fair value gap to right here too. Like I could take a trade after this, like after this has ran out liquidity and come down here. That's why I took the trade. Um, but another level of confidence would be, you know, if price were to come back up into this breaker area that I have tabulated here on the 5 minute, if price were to trade back up into this and then trade down further, that's just another level of confidence. I feel like in oil, you don't always get that, um, but you may. And if I were to go down to the 3 minute, you may. Yeah, it's kind of looking the same. But I use 15 minute, 5 and 3 to figure out like where my entries are going to be and what I want to do. Um, but yeah, let's see. Yeah, we're not really focusing on GJ right now. The one thing that I like about that I don't like about the oil trade is that since that breaker has formed, price could go back into it. And the fact that I said we were majorly bearish on the DXY, you know, you could definitely have a turnaround type of deal. I'm just waiting for this guy to drop in here. Let's go back to the 15, go to the 30. Yeah. So we're focusing on this fair value gap for GJ. Mind you, we're below the 12 a.m. open now as well. So this would be my ideal setup. And then if you just want to be like extra sure, you got this order block here as well. So typically when you have a fair value gap and you have a breaker, you're going to have an order block in the same ish area. All of that is a lot of confluence for a potential bullish trade if price respects it. So the one thing that's why I have a short target on oil is because I feel like the DXY is still bearish, and it being bearish, it may only provide some downside movement for a little while until it turns back bearish. So we'll just have to see. We shall just have to see. Um, but yeah, you said because that first 30. Let's go back to. Oh yeah, okay. Said because the first 30-minute candle into the FEG to the left would give a fair value gap with displacement on the 1 minute chart. on GU. Let me read that again. Because that first 30-minute candle into the, yeah, you're right. Yeah, you're right. Yeah, you're right. So that's why I said I use, when I'm looking at getting into trades, I typically will use 15, 5, and 3. Only issue with that is that the actual fair value gap on the, is the 15 the same one? Yeah. The 15, the 5, and the 3, the fair value gap is basically here. This very small area. And there's nothing wrong with using a smaller area of price. It's this same thing here. Let me take all this gibberish off the chart. Like I already, once I know where the Asian range is, I gotta let that thing go. So this is the third. This green zone is a 30-minute fair value gap, and this fair value gap would just be like the 3 or the 5 minute. Um, and my only preference with paying attention to the price action on the 30-minute chart is that this fair value gap is almost directly across from, and a little bit higher actually, from this breaker block. And also it's basically got the order block right in between it. And then I would use the price action on the lower charts to validate that. So I can still look at my zone, and I would just monitor the price action on the lower charts to validate what's going to happen in this area. So a lot of times if I'm looking for a fair value gap, I would look for it on that 15, 5, or 3, because it would give me a larger area that I could focus on. But if the best area to focus on is the 30-minute, then I'll just do it like this and monitor the area with the lower time frame price action. Um, but I think it's just up to your preference, because like you said, yeah, it would show displacement on the 1 minute chart. I use the 1 minute occasionally, but I like the 3 and the 5 because it kind of gives me more of a summary of that 1 minute, and so that way I'm not being too impulsive with my trading, because I have a tendency, I've had a tendency in the past to switch my bias unnecessarily, like this trade. I like it because I feel like it's the best bullish target. Even if you look at this Judas swing now, this is another area where you basically have that fair value gap covers that 50% and 62% area pretty much. So anything within there would be really solid trade entry wise for me. And I feel like the news could potentially spur that price action up, further. And so I've had to learn how to stick with my bias, you know, and just be okay with being wrong, bro. Like I would rather stick with my bias and okay, yeah, I was wrong. Then switch it up, switch it up, switch it up, and never really have a true understanding of where I'm at. Um, so so yeah, that was a long way to explain that, but yeah, let's look at that DXY real quick. Getting some back and forth price action. With the DXY, there's no like fair value gaps that it's pulling back into. I guess it's already hit this fair value gap, but the fact that you've ran out this liquidity is interesting to me, because a lot of times you'll then see price trade back up into this range, or back up into a fair value gap to go lower. But so far in this hour, this has proved to be, you know, not going too much lower just yet. So we really may be stuck waiting for, not stuck, but we really may just have to wait for more information in the market. But I have my setup for it. I have my setup for GU, and it looks like my setup is being responded to, honestly. Yeah. So now it's the question of, is it ready? I just pointed out that this was the 50% and the 50% and 62% area. I have been quick to take these trades sometimes. I'm like, oh, it's going back up. Oh, I'm gonna take the trade. So I'm trying to be more patient with that. But this looks nice. I mean, look at the 15. This is the, oh, that's the 15 too. Yeah, that looks nice. Okay, well, we might have something here, folks. Now, on the 30-minute, it hasn't barely touched. It's touched it, and it's ran off. So could still be pretty solid of a move, especially if this is going to finish here. This 15-minute looks like it's enjoying this. So the best thing, if you are going to take a trade here, would be trying to place your stops either below this fair value gap area or below this low. Um, I would have liked it to dip further into the fair value gap. Um, but I'm not upset with the way that this is finishing, so long as it does still close, as a bullish type of candle. Um, that would make me happy. So we shall see. We shall see. Um, okay. Yeah, we'll see how this turns out, especially with the news and whatnot that's coming. Uh huh. Uh huh. But yeah, that's a solid entry. Solid entry. Solid entry. Solid entry. Below, right at the 12 a.m. open. Now just have to see if it's gonna continue to give us what we want. So this is where my eyes were today at this run on liquidity. I like this little cat thing. It's kind of cool. Just put it here wherever I feel like the run on liquidity is. And this is why I was saying with oil, it could potentially, this could potentially just be like a run into this fair value gap. I don't know. Yeah, because now I'm seeing the 15-minute fair value gap over here after not seeing it before. And it's literally, oh, let's just look at, yeah, let's look at the 5-minute fair value gap here. Just because when you know that you're majorly, your bias is one way, you want to, like I said, stick to it as much as you can and try to anticipate the price action following suit and then see what's going to happen. So now you see that prices ran liquidity come into this fair value gap, and it could just be providing entry points for the upside, to be honest. Could literally be providing entry points to the upside. Only one way to find out. Only one way to find out. Yeah. So we'll see. We'll see if we're right or wrong today. We shall see. We shall see who is right and who is wrong today. Yes, sir. All right. But yeah. All right. Appreciate your conversation too, Raj. I'll catch you next time, bro. Thank you for joining. And thanks for subscribing. I appreciate it, man. Too bad I can't like people's comments. All right. Looks like we are headed in the right direction, people. Where is the stop loss supposed to be, though? I say below this. That's what I said. Yeah. Ultimate take profit. We're looking a couple levels above at 1.283, like 2837. Now, the only thing that we have to be mindful of is that we have news at 7 a.m. So this is like seems like an early move. We could potentially have caught the low of the day. Now let's just see how far price is gonna, you feel me? What what all price is gonna give us for the day, and then we'll just monitor that and try to, stay in line. Hey, that's what's up, man. I appreciate your sub, bro. I know I haven't had as many videos and stuff, but really I just been trying to focus on getting better at this execution wise. And then once I really get funded and get some payouts, I'm really gonna have more like cool videos for y'all. So, but yeah, man, I appreciate you subbing from a long time ago, bro. And I'm gonna continue to try to do these live streams so we can all communicate and bounce ideas off one another and whatnot. So appreciate you, bro. Oh, all right. So now the question is, if you're looking for an additional entry, where does that additional entry come from? Because really, your first entry was this fair value gap. This is your second entry, right? So if you were looking for another entry, you'd want that entry to be within a reasonable distance to where we are at right now. Um, and you wouldn't want to play too many games with it. You know, you don't know exactly how far price will go, but yeah. Yeah, you said not funded, bro. Didn't you take like a 5K challenge a few months back? What happened to that? Yeah, I took a 50K challenge a few months back, bro. It just didn't go well. I can't lie. It just didn't go well. I think the setups were like in February and March, and they just liquidity just wasn't really favorable to me in the setups that I like to use, and so I just couldn't grab. I think really the main thing with my not being funded yet is not having enough time sitting here like this in front of the market and like trading and tape reading. Um, I did have that extended period of time last year where I was doing that 100K challenge, and I did pass the challenge part, and I did not pass the verification. So that part was on me too, where I really didn't I wasn't as seasoned as I am now, at least. Um, but I didn't have the same exact. I had the same model, but didn't know how to execute. Let's just say that. So back in March, you know, it was kind of the same deal where the setups weren't really there. It's kind of forcing it, and I would just chalk it up to a psychology thing and lack of ability to execute properly. You know, getting back into those old tendencies of taking gamble trades when you know you're supposed to take certain type of trades. So that's why right now I'm just focused on the lower. I'm in a challenge, but I'm focused on taking just a lower challenge and just trying to execute, not worry about the money, execute, and then use that as a way to get me maybe a larger challenge in the fall. Um, And if I can do that and have success with a larger challenge in the fall, that the other thing about the challenges is that I'm gonna be focusing on challenges that aren't a month long, because I feel like it's just difficult for me personally. I have a full time job, I have kids, my wife, so it's just a lot of ways that I'm being pulled, strings that are being pulled. So I feel like having a challenge that I can focus multiple months and not rush it will help me a lot too. So yeah, man, that's it. Just lack of focus and lack of execution, but that's why I'm here. Just trying to continue to get better every day. As you can tell, I know what I'm talking about, but it's not about that. It's just about my execution. You know what I'm saying? Actual execution and following through with understanding how to execute in the live market. So I can do it. Just got to take my time and not rush it. Do it right. So I am not funded yet, but God willing, I will be in God's time. So we shall see. All right, I'm not going to worry about taking another trade here. I'm just going to let my current trade ride and monitor that. I think that is enough for me to do. um, Looking back at the oil trade, maybe oil will still set us up nicely. It's like rebalanced this fair value gap and it's still going down. So maybe it's not a bad trade. Maybe it's not a bad trade after all. It's interesting because you would think that oil and like GU would be going the same direction, but it doesn't always happen like that. It does not always happen like that. And looks like GU's coming down a little bit. So, so yeah, yeah. So yeah, let me see. Oh, he said, Philly Real lost his first 50K way back in August and stopped trading and completely now. Oh man, yeah, depression is just. I know what you're talking about, bro. Somehow got back a few months back, spent so much money trying to get funded, lost like 8 challenges, more of 5K and 10 combined on every firm out there. Yo, let me tell you, bro, you're not alone, bro. That's why I feel like that's why I want to be out here, because it's like folks need to know that this is a part of the journey. Like that that understanding how it feels to have not gotten what you wanted, especially like in August. Like I felt the same way because that was about the same time that I had failed my 100K, and I had been going on my 100K since January of 2022 all the way through August or July, and then passed the challenge and still failed the verification. So I know what you mean, bro, but you got to stay locked in, even though it hurts. Even though it's like very questionable, it's like you're using the right concepts, but it's like, dang, why can't I use them correctly? You know what I'm saying? Like, stay locked in. Even if it's just demo trading, just getting in here every couple of days a week, trying to find your setup, focusing on narrowing down what your setup is. Like, what is it exactly? You feel me? Can you write it down in 4 sentences or whatever on a business card, and then just get good at that, bro? Like the losing challenges thing is gonna happen just because of the nature of the challenge, like what time of year you take the challenge. Sometimes your setups might not be there. Then also your risk management. Is your risk management solid? You're gonna have to take substantial lot sizes to actually win the challenges, especially if you have to win within a month. So there's that. But save your money up and think about one. taking a larger challenge that does not have a month long time limit. Maybe it has a like a year long, like a 12-month time limit, or maybe there's no time limit. Like a surge trader, there's also Lux Trading, and there's also the smart funded trader from Paladin and Omar and Words of Wisdom, dude. That dude. Um, they have a new prop firm as well. So just think about like trying to take a prop firm challenge that's not gonna rush you, because I think especially as someone who, I wouldn't say that I'm like a pro at ICT concepts. I would say I'm more along the lines of like beginning my career with ICT. Like I think I've this is like my second year. This is the end of my I'm going on 2 years of ICT knowledge. So I think it's helpful for people like us to take challenges where we're not going to be pushed for time, because what happens at the end of that challenge, bro, is when you know you got 5 days left, you're like, shoot, let me up the lot sizes. You know what I mean? And that can go well or that can go bad. And and typically it goes bad because it's like there's so much stuff going on that you're trying to execute well, you're trying to make money, you're trying to win the challenge, you know it's gonna be life changing. But that 5 days left is just like a bummer because you're like, bro, I haven't even seen the setup that I'd like to trade yet. And I got 5 days left. So you just end up rushing it. So I would definitely stay locked in, bro. Whether it's the 5K or 10K, like look at challenges. Look at the 5K or 10K I like because typically they have discounts and it's not that much money. So you can really get your stuff right. But like once you feel like you have your model, once you feel like you've been profitable in demo and you really want to like put yourself out there and take a chance on yourself, like bet on yourself, and you're confident in yourself, then go ahead, save up your money for a couple months, and then, like for example, this fall, the price action in the fall is typically a lot better um, for like certain tendencies, certain markets. So I would save your money up throughout the summer and wait for like September and take a challenge like towards the middle of September or beginning of September, because that is when price action is going to like become a little bit more fluid. And then I would take a challenge that is a longer time limit. No time limit. Yes, exactly. So that way can take your time. What did you say? You said now I stopped putting in money buying challenges anymore, and I have 10K challenge at my funded FX, no time limit, and didn't start trading. Gotta get my mindset right. No more lowering, no more lower time scalping, just 2 to 3. I don't know exactly what you mean by no more lower time scalping. Oh, you said setups off of the 4H and daily OB and FEGs and ride the trends. Oh yeah, yeah, yeah. I got you. Yeah, that makes sense. I mean, you don't necessarily. I wouldn't say that the lower time scalping is your issue, but I would say that you always have to focus on establishing your bias on the 4 hour, on the daily, you know, like you're saying, and then go down to the lower time frames to execute, like the 15 or whatever. And if you like the higher time frames, then just like you said, just focus on that if that's what works for you, you know. Um, so yeah, just narrow down whatever that model really is for you, and then lock into that. Whatever you're listening to with ICT, don't get confused with the silver bullet. I mean, it's not nonsense, but like for my trading setup, here's silver bullet, and it's like, dude, don't listen to that. Like, just focus on the stuff that you already learned from ICT and get that right. So that's what I would suggest to you too. I mean, we're in the same boat. We both striving for excellence. So you got this, bro. I believe in you for sure. You got this. Just believe in yourself, bro. Keep going. Don't stop. Don't give up. But yeah, man. Looking back at this GU, it's not looking promising. I think this just goes back to the whole like Oh, and look at that. Oil is actually, see, this is what I'm freaking talking about. Oil is actually doing what I thought it would do. And I took my trade out because I was like, I don't know. It looks beautiful now. Look at it. Just look at that thing. Look at it. It did pull into this fair value gap too. I should have saw that. It's too late for me to take this trade. But this is why I freaking like oil, man. Gosh darn oil. Looking good, boy. Golly. But yeah. So with this one, I can have two touches to this fair value gap zone. I am glad that it went at least this high. But now, you know, I'm wondering, I mean, maybe it's just setting retail up to think that this is a resistance. I mean, you hope, right? You hope that that's what they're doing. But I think the fact that you got some news coming in the GBP, that was why I was saying that I liked oil better, just because it's a little bit easier to gauge. Um, I'm gonna stick to my guns on GBP, and I think I have my stop set below what this. So we shall see. I don't necessarily like the second run back into this though. And not to say that it's going to, you know, I still like the setup. Um, but you can never be overconfident because you really don't know what's going to happen. So there's a nice trade in oil though. You love to see it. You love to see it. And I bet you it at least runs here. And this is liquidity here too. Yes, sir. Have a great day too, man. I appreciate your conversation as well. I believe in you, bro. Let's execute. Let's get right. But yeah, oil looks nice, and you got some liquidity down here. Too bad I didn't take it though. And that's another thing, man. Sometimes, sometimes you just gotta learn when you didn't take it, it's okay. At least you saw it. At least you saw it. You identified it, and I did say that that was going to be a better trade, but they might both go well. Never know. They might both be just fine. Yeah, we'll see. We shall see. Yeah, yeah. Let's just observe. I'm probably gonna be quiet for a little while. I've been talking a lot. I don't see any more questions just yet, so I'm probably just gonna be quiet, talk to myself, and see what's up. So y'all let me know if y'all got any questions. I'm just gonna be chilling for a hot second. All right. All right, folks. So what I'm gonna do is I've already laid out to y'all what my thoughts are for the day. Um, gonna see if these hold out. Obviously, the U.S. oil trade panned out, so kudos there. Even though I didn't freaking take it, fudge. Um, but I will be monitoring the GU trade. I'm going to, I might just take my trade out of GU for now because it's basically back at break even. Um, and just wait for more information, to be honest with you. There's nothing wrong with that. And nothing wrong with admitting that. um, I'm going to wait for more information because it's not looking as pretty as I thought it would be, as pretty as oil looks. So I'm going to probably wait until 7 to see what they're talking about and then make some decisions then. So I may re-up and come back with another stream at 7 or something like that. So y'all stick with me. All right, I'll catch you guys later. Peace and love.